Hi everyone. New month, new week. Getting ready for Christmas. Side note, remember, Christmas is about the giving of ourselves, not stuff, right? Our great example from the Lord Jesus. Anyway, that's my diatribe on the overly commercial, horrifying things I see at Christmas time. Wink, wink. All right, let's start with the ES. Looking at the monthly charts because it is a new month, folks, it is a buy the dip. And if you're staring down a really big dip and you're like, holy cow, where should I buy? Get back here and take a look at this. 5,100, 53, 5290, 5305, something like that. Let it recapture those levels and then you head on. If it breaks, step back and wait, right? We could come all the way back to 4770, but everybody is thinking we are headed up. And this line tells us exactly that we are doing that. And so to me, another buy the dip event for the week is in play. Now, we have a very big week. Let's take a look. We start with PMI this morning, ISM. We got some bills tomorrow, ADP, EIA. We've got Powell speaking. Who knows what he'll say? We've got trade goods, jobless claims, and then the employment situation. I expect because the employment situation is at the end of the week, we should have ourselves a little bit of a sideways week. But traders are still going to want to go long. So we're looking for buy the dip formations, top of the last monthly wick. Looks like 59.20. Have no idea if we'll come back there, but we are headed to the north. Here's our weekly chart that we normally look at. Please, pardon me. We've got a rising wedge, and that, doesn't normally tell us great things, but still buy the dip. And so this week, we're looking at edges that may come into play all the way down at 58.35, or we could see ourselves a brand new breakaway into that 61.27 area that gives us the brand new zone. Right now, we just don't want to break below the low of last week. That's what we want to hold. If we do, this looks awful sideways to me. So that's going to be the line in the sand. Can I hold 6,000? All right, let's take a look at the NQ. Dips or buy zones across the board. Here's the monthly chart. Look at that. Savage dip. Still a buy zone. Okay? How do you stay away from the areas that go, holy cow, do I need to short that or go long? Collapse outward. Zoom out. And go to those monthly charts and go, okay, where do I see heavy congestion? And where do I see complete reversal? Once you see those, and you know the framework is buy the dip, then you can collapse into the tighter time frames and go, okay, I'm going to look for long as it comes into support, right? So here is what we're staring down. What do we have? Well, we've got a few weeks where we have not broken the highs, right? But we're still holding higher lows. So where does buying pressure come from? Comes from underneath. Dips find buyers, all right? People can put their orders way up here, hoping, but that's never going to move unless people start buying, and people buy from underneath. And so dips or buy zones. Where might the dip be? It could be as high up as 20,800, 830. We could hold 985, right? And then just walk straight up into 21,527. I do not know, but I do know this. Dips will find buyers. And if they don't, step out of the way until they do. And that's what we'll see, right? Deep dips, 20,000. But for now, I think we're going to dance around this area and try to build out the profile. How do I know I'm wrong? When it breaks my level. And if it breaks my level, if I've tried to buy the dip quickly, if I go, I'm going to put a limit order out here, and I lose it, I've got to tell you, I'm not going to have more than 20 ticks of risk, right? I just can't. The market could go anywhere. Let's look at the Dow. Big beast last month, monster month last month, right? monster month. We've got ourselves these ranges way down here at 38,000 and then again at 40,000 where support becomes resistance. And these charts are simply telling us, listen, you got to buy the dip. Just wait for it. If you want to sell the bounces, you better keep your stop tight and you better look for old support. That's all I have to say, right? From a weekly perspective with the YM, what do we have? You know, a big trend, right? I mean, we've got ourselves a channel moving straight up. Now we're at the top of that channel, and so we should see some kinds of fading, but should, would, could, maybe, we have no idea, right? But what we do know is that dips will find buyers because we're sitting in trend. And if they don't, we have a very tight stop and it collapses into the next support, okay? That's the key thing to remember. These charts are really trending sharply upward and nobody wants to miss out for the end of the year. Let's take a look at Bitcoin. I talked about Bitcoin and I said, hey, listen, everybody's going to want to try to trade over the holidays talking about Bitcoin getting up over 100,000. I think it'll retest 100,000. It did, and then backed right off. Okay? Right off. So what are we thinking about? All right, well, let's see. What we're thinking about is collapsing down into the support zone and actually filling in the volume profile. So ultimately, my wish price is somewhere around 74,000. That'd be great. If not, we'll see. But right now we've got an inside channel, and as long as 100,000 doesn't get broken, we've got ourselves a pretty nice collapse on the horizon. And that's cool, right? That's all fine and dandy. We'll see what happens. It is a risk-on event, so as the market, if the market continues to drive upward, we're going to see buyers try to rush in. Okay, so that's what we're staring down from a monthly perspective. What we really have to watch is the bounce and rise up over $100,300, right? And that gets us, into these areas, 102,000 and then 110,000. And once it gets past there, it's just going to start running like the wind if it continues. All right, next thing we want to look at is RTY, right? The Russell's in a topping formation in my mind, but it is by the dip, right? Look at this flag pattern right here. Literally kind of ugly, but definitely a bull flag, right? And it's had bull flags all the way up, Next move, for these guys, I want to see a fade, frankly, right? I do, but everything says buy the dip. So if I want to see a fade, but I continue to buy the dip, that's going to keep me on the right side of trend. But if you want to short it, just make sure your stops are tight. You just got to make sure your stops are tight. I'm going to look at nat gas. Super important, simply because this thing has been basing for almost 2 years. Okay, so in the Mark II energy independence, we are going to exploit every single energy resource we have. One of those is nat gas. So much of it that we actually flare it off. But those days could be coming to a space of significance if we figure out a way to transport this efficiently. Right now, transporting it is very, very expensive because it first has to be liquefied. All right, and then it becomes, a floating explosion barge. So here's the thing. I think that we're at the top of a range. It's been at the top of a range since January of 2023. Here we're coming into January of 2025. We should see a fade, but this next fade could easily be the area that we start to buy it. I'm going to start staring down some solar things also, but definitely looking at these formations. Hang on a second, folks. I got to move a stop up. Now, let's go to oil. Also sitting in a massive sideways range. I believe a lot of interesting things about what's going to happen here, but this could very well be a bull flag, and a bull flag, as we know, is bearish. What in the world? Remove. All right, here's what we're looking at this flag pattern right here, right? For it to break down. So where are we? At the bottom of the range. Liquidity all the way down here at 65 to 63, and then 54 below that. All right, my thought is bounces into 70 have been sell zones. I think they're going to continue to be sell zones. All right, let's take a look at gold. Oops, never used that right contract there. What? Gold, sideways, right? Take a look at the weekly. The monthly is still by the dip, right? Still by the dip. We had a dip last month. It came in at 25.63. Hang on, I gotta flatten this straight. That's a lot of profit in there. So what we want to do is see how well it holds 26.40. I think the dollar is really pushing against this, and that's the same reason I think oil is having trouble, right? The higher the dollar goes, the cheaper these things get in dollar terms. So that being said, we're looking at a crest that we've seen in times past that brings us a pretty solid fade. And if we use our box to give us breakaways, that's not a very clean box, but look at that halfback right there at the halfback. I'm telling you what, it's when you have a very heavily traded stock or future, this halfback event is it's money. You just have to be staring it down. All right, let's get to SPY. Buy the dip. Holy smokes, is this a buy the dip? I just flattened a long, FYI. But 605 looks like it's the next one. Let's do Fibonacci here. Good grief, I have no idea how long this video is. 609. Well, I think folks are probably going to, they want to go to 610 because that's a round number. But watch these monthly edges. I think the wick at 583, if we get any kind of big bounce or big fade into the jobs numbers, the monthly levels are going to be key areas for us to position our trades. All right. Qs. Let's do Fibonacci here, but let's do it on the short wave because that one right there, I don't love it. This one gives us a 1.6 at 504. We're up at 509. So 2 is 563, right? That's a lot of motion. If we can find ourselves ranges that give us good sideways pressure, like maybe this box. Let's do this. Pretty small box, but let's see. Yeah, it breaks right out of the top of that. Wait, did I do that right? No. Come in here, come in. Oh, for goodness sakes. Yeah, so that's pretty much at the top of the third tier there. So we could have ourselves a little bit of noise, but never underestimate a market with thin volume and a lot of people piling in to make sure they are looking in the right places. All right, okay, so that's it for me. Pretty wide angle, of course, but you know the storyboard across the way, no matter which instrument we're looking at, it is a buy the dip event. Wait for the base. This looks sideways. You don't want to buy this top. Let it come back and test the area because you've got a sideways series of moving averages and a sideways VWAP. Same sort of thing. Could break away, but if you chase it, you got to be quick or you're going to be dead, right? That's the order of the day. Chasing things out of this range could give you some profit, but you better stare it down and you better manage your risk. Remember, the closing of the prior day's VWAP, once it recovers, it gives you a little bit of an edge. But if your moving averages are sideways, you can be sure that you've got yourself some sideways formations. And so be careful there. Let patience be your guide. All right, everybody, I'll see you on the streams. See you at the midday report, and take care.